My conspiracy theory is that this is a not purely organic operation, and that being able to control the prediction markets effectively means you control what people perceive as plausible, which makes it a lot easier to narrative construct.
On Polymarket, there is will stablecoins hit 500 billion before 2027, and that would be another 70% growth within this year, and that is currently priced at 39%.
All right, Rob.
So
let's get in there, man.
Pretty decent odds.
Ooh, I think this is some easy money.
Yields are definitely collapsing. They're harder to get, and they're almost impossible to get on your own. We knew that the market would be insanely fragmented, and you need a market efficiency engine like Fusion.
History doesn't necessarily support this idea, which is, I think Solana governance tokens may make a comeback.
Nobody really knows what happened to it, but on the other hand, welcome everybody to our DeFi 2026 outlook.
We're live.
This is quite a hard pivot now, but nevertheless, we're joined by Steven from the very esteemed DeFi Dojo, Darren from IPOR, and Rob from InfiniFi. Thanks a lot for joining, everybody. So how did you guys weather the holidays? Anything exciting you noticed in the markets? Anything that you did, or what's your general outlook for 2026?
Holidays were mostly dead. I mean, in terms of the markets, there was very, very low volume. There was, I don't know, a few mishaps or like protocol things that had happened. Volume was low. Everyone in my family got sick. There was a lot of sickness going around the entire country. But then precious metals started to skyrocket, and I felt really cool holding gold and silver. So we could talk about that in a little bit. But let's hear from the other lads.
I just sat in stablecoins and mostly InfiniFi, to be honest. It's been pretty nice. I don't know, holidays were relaxing. Got to hang out with my family a lot. Worked on my 3D printer setup in the basement and just kept the rates chugging along.
Oh, did you get the new bamboo? Or did you?
Yeah, I did. I got the P2S.
Nice.
Yeah.
Very cool.
I gather you have one?
I don't have the P2S. I have the H2D.
Ooh, fancy. Is that the laser cutter?
Well, the H2D Plus has a laser printer. I got the standard one.
Still an asshole.
It is, yeah. It's awesome. Darren?
What about you, Darren?
Me, I spent the holidays in Eastern Europe and then Northern Italy. So just got back. I did a couple days skiing. Yeah, it was good. Fusion behind the scenes just runs. As Steven mentioned, there were some incidents. We had a white hat on one of the oldest vaults, and full recovery within about 12 hours. That was a little full fund recovery. So yeah,
fantastic.
That's
awesome.
That's really nice.
Oh yeah, I remember you actually had to be back in the trenches a little early after New Year started. How did you weather the storm? Was there like any lasting damage, or how did you experience it?
No, I mean, we got you never want to get a DM from like, I think it was Hexagate and then Blockade and BlockSec in that order. But basically, it was external to Fusion. It was a 7702 PECT-related contract that there was apparently a white hat bot which monitors, and it's it was a good faith incident. So then we went back to the playbook. Message from the deployer, got the funds back, full fund recovery, did a check, was up late at night checking all the vaults. None of them are affected except for this one. So yeah, I mean, you never want to experience something like this, but I was quite happy. The team right on the ball. SEAL team was great. So yeah, I mean, it was a minor bump. It was obviously not the best way to start the year, but I mean, the resolution was swift, and I think that's good faith. And besides that, everything else is working like clockwork. So that's quite nice. We didn't have any major withdrawals. So yeah.
Nice.
I mean, that's pretty much the best outcome you can hope for in those sorts of situations. I'm glad it worked out for you guys. It's there is nothing quite like those sorts of alerts.
Do you know if the exploit opportunity was detected by AI, or was that still all manually executed?
No, so it wasn't Fusion specific. It was actually something targeting the EIP 7702 PECT related contracts, and if it was just inside of this realm. So I imagine that we talked with the White Hat. It's a bot that's self-evolving. So yes, a little bit of AI, a little bit of machine learning. So yeah, and I mean from that bounty, we get ongoing monitoring. So that's also a very, very nice outcome.
That's really cool. I mean, I've been in the situation of having false positives before, and I know that is just one of the most stressful things. Actually, having to deal with a live one, not fun.
Yeah. Well, I was, let's see, ETH Warsaw a couple of years back. We use PagerDuty for alerts.
Yep, same.
And the devs decided to clean out the database. And I was about to speak the next day. So I had about 15 minutes of replays of every single deposit and withdraw from the protocol, in a series of about 15 minutes. And my first thought was, like, oh shit, what's happening? Go look on chain. It's all good. But this was like, these are the kind of heart attack inducing moments.
Our PagerDuty fired a while back with the Equilibria exploit because we monitor Pendle, since obviously InfiniFi has a decent amount of exposure to Pendle. So the system didn't realize, I mean, it's not supposed to. It's supposed to just wake you up and freak you out. But it did not realize that, of course, we have no exposure to Equilibria. So if Equilibria gets exploited, it's really bad for Equilibria, but it doesn't hurt us at all. But I'm getting this message Saturday morning, critical alert. I'm just running into the office at full tilt, half dressed, trying to figure out what's going on. Totally fine. But still, those false positives. I mean, Steven, you're about to go into it. It's you'll get a few, and you definitely want the false positives more than you want the negatives. The lack of alert.
Yeah, well, that's what Hypernative was saying. Like, there's going to be a ton of false. It's almost all false positives all the time, but you want them because sometimes they're not.
Maybe to
better to find out, better to get a ton of false positives, maybe lose a year of your life, than just not know.
Yeah. What are you showing here, Max?
Steven, not Steven. Stablecoin market cap, not Steven market cap.
The Steven
so
market
right
cap.
now we're sitting at 300 billion. Where do you think we'll sit at the end of this year?
Higher.
$1 trillion.
Trillions. Yeah, I don't think that's unreasonable. I mean, what was the increase over the past 2 years? We can then semi-extrapolate. Like, if you look at, there was the peak during, I don't know, whatever the peak mania of crypto was, and then the trough, which is still substantially higher than the highest part of last cycle. I mean, like, by a ridiculous amount. And then now, we're not in a raging bull market, but the interest for stablecoin yield has certainly grown in spite of that.
Yeah,
so
we basically grew from
is
200
impossible.
billion to 300 billion throughout 2025. And interestingly enough, on Polymarket, there is will stablecoins hit 500 billion before 2027, and that would essentially be another 70% growth within this year, and that is currently priced at 39%.
All right, Rob.
So
let's get in there, man.
Pretty decent odds.
Oh, I think this is some easy money.
I like
downside is you got a 2-year, before 2027, that's a 1-year time frame. You buy yes at 39 cents. What is that? 150? No. Yeah, it's 150% payoff, right?
Yeah. 60 cent payoff.
Yeah, that's a really good, annualized, that's really good.
Is there a way to hedge that? Probably.
I find this market very difficult to price and assess because it really depends on where the stablecoin growth flows are coming from. If it is just crypto native and DeFi native capital, I would be very surprised if we hit 500 billion this year.
It's not going to be.
But yeah, imagine if like one sovereign or one bank starts to like put all their money market funds, or like a sovereign starts to issue stablecoin-esque bonds on a blockchain, then we could very easily hit the remaining 200 billion until we hit that within a few weeks. So I think that's a very like path dependent outcome, but the probability of these different paths are difficult to assess.
But I mean, like, I think it has Athena listed there. So you could say like the money market funds or the delta neutral hedge funds that create a synthetic dollar or stablecoin issuance. Do you guys remember what was the number that's thrown around of RWA issuance on Canton Network, for example?
Wasn't that like in the trillions?
Let's
What they
sign
had
beat on
lined
the
up?
NASDAQ.
So I mean, it really depends on the reporting on what's accepted. This could be much higher already.
What we really need to
what you
find out is
consider.
who's running the Oracle and what have they bet on.
Yep. Yeah. Well, I mean, there've been a few cases where it's like it's less about what reality is and more about who's determining how it's measured.
Yeah.
Yes. Did we invade Venezuela?
Right. Yeah.
I saw that one. It's like, well, apparently we didn't invade Venezuela, even though our helicopters flew it in their country. We kidnapped their dictator.
It's not an invasion unless it comes from the invasion region of France.
I mean, talking about,
I haven't heard that one before. I like that.
Prediction markets. What is your guys' outlook for that subsector? I would say that in 2025, polymarket, Kalshi, and like anything else prediction market related have been on quite a steep rise, especially in the later half of the year. Do you think that will be a trend continuation, or have we reached a local peak? And how do you think the integration of prediction markets into DeFi and crypto finance overall will continue?
I can give I'll give the conspiracy theory first because that's what I'm good at. My conspiracy theory is that this is a not purely organic operation, and that being able to control the prediction markets effectively means you control what people perceive as plausible, which makes it a lot easier to narrative construct. And so I think that prediction markets will do fairly well because there is incentive for them to do very well from even nation state actors. Like there's a lot of incentive for these things to become popularized. And it's also like the next pumped off fun. It's like abjectly gambling in a lot of cases. Yes, can you have edge in some things if you know a lot or, but it gives most edge to people who have illegal insider information that they shouldn't be trading on, and gives the least amount of edge to anyone else trying to trade against that. And so those sorts of things tend to do really well because, people with the edge have a lot of money, so they can bring a lot of volume. Aside from that, that's kind of the conspiracy theory angle. The less conspiratorial angle is it's really, really cool because you can hedge literally anything. So people have been talking about, well, you could use it for healthcare. You can use it for this. You can use it for that. And that I think is fairly neat. And if it is a decent indicator of reality and probability, then I think it'll do well just because of that value add to reality and metric analyzing.
Health insurance is just gambling on your health, by the way.
Exactly right. Yeah.
Like that's literally what it is.
And it should be good airdrop.
I don't get enough points. Where are my points?
Yeah, that's right.
Yeah, I think with health insurance, the
stop
points programs are
just
even
go start
more
gambling full
obfuscated.
time, Rob. This is, we stop building protocol, just become points farmers, right?
Win Trump bucks, sir. Win Trump bucks.
I think holding Dolomite was just Trump bucks.
We're talking about gold and precious metal. You've talked about
I want to get
let these guys get some opinions.
Yeah, let me talk about prediction markets. I got to go in 7 minutes. My take here, I would agree with Steve. This is really easily gamed. Look at how much volume this has. That's $500,000 to control the narrative. That's cheap. That's real cheap. That's probably not even a full $500,000 since it's probably $250,000. If you have enough interest in something and in having people's perception be one thing while you sit and pump money into something that's not an illiquid prediction market and profit massively, yeah, that's a really good trade. These things have very shallow liquidity, but they have high faith. While something that like the market, people are going to look at you pumping a ton of money in counter to the prediction market and think, wow, the market's just wrong. The prediction market clearly knows better. So people are not thinking in terms of volumes. People are just thinking this is the shiny new thing. I must trust it, which is a really insane fallacy that nevertheless we see consistently throughout, crypto in general. I mean, look at meme coins, look at pump fund, look at all this. People are always like, oh, I'm screwing over the biggest players. They always think that, but every single time they're not the ones who are screwing over the biggest players. The biggest players have just found a new rotation and a new way to screw them. So Yeah, I think prediction markets are definitely the cote du jour. I don't know how long they'll last as like the thing, because if I'd asked, you know, y'all last year, hey, are meme coins here to stay? A lot of people would have said meme coins are here to stay, but no, they aren't. Neither were NFTs. It's just a constant rotation.
Maybe I can put kind of a counterpoint to that. I sit also on the angel side, so I get a lot of people inbound, and the number of kind of niche prediction market plays I've got recently has really ballooned. Either about building a marketplace, building a industry vertical prediction market, something that's missing in kind of major markets, or even funds or market making around prediction markets, right? So I think that I had a very interesting call a couple of years back. It was a big macro firm. They wanted to ask about one of these different blockchains, one of my kind of like my honest opinion. And the thing, they started out the call with, we pay attention to bubbles. We don't buy bubbles, but when something's rising, we know that there's something behind it. And when it pops, then we go look for the winners. And I thought it was a very kind of interesting like investment thesis. It makes a lot of sense. So if you take that kind of thinking right now into prediction markets, there's surely something there. Definitely in sports gambling is the easiest one. It's the one that will be most heavily looked at, most heavily regulated. Already has incumbents that have basically strong moats around, and they'll be fighting the same way banks are fighting DeFi or crypto in general. You'll have kind of the incumbents there fighting in sports betting. There's a clear product market fit, but yeah, something's happening, but it'll be very difficult to pick the winners, of kind of the, you have the Polymarkets, the Kalshis, and all of the other kind of verticalized or individual plays. So, in this, like you go with maybe the kind of the fat protocol thesis play.
Yeah. I want to kind of ask you about that. You talked about liquidity, and maybe I'm naive, but why hasn't a prediction market spun up that has an HLP, like a counterparty trading? Because liquidity is the issue for these prediction markets, and
I've been
a
wondering
counterparty
about the
vault would
exact same
solve
thing too.
this. We want to build it? Let's all abandon our protocols and build this right now, right here.
Had some talks with on the vault side. On the vault side, you can have basically a market making fund. We've talked with different people about market making inside of DeFi, but here market making on Polymarket, you can build like a lending optimizer where everything is always active until you can size into these different bets and effectively build a fund around this. So I think that's definitely something viable, but it's too niche of an opportunity right now. The question is what size can the market absorb? If you raise like a 1 million, 5 million fund, you probably have some opportunity. If you raise 100 million, you're not going to be able to make any alpha. So how does this scale? How does the scale? What's the profitability? What's the size? Yeah, not now, but in the future.
You also just can't counterparty to anything here, right? Like there's some bets. I mean, like with
the same goes for Hyperliquid, though, doesn't it?
Yeah, but that's different though, because Hyperliquid, the assets continue to exist regardless. With a betting market, you're going to have a lot more churn and need to have a much more constant, underwriting process of what you're willing to take counterparty on.
And you have to be a domain expert, or
Yep.
the amount of data that you have to be good across a diverse set of outcomes, it can balloon.
It's a lot more like insurance underwriting than it is.
And there's no like value to carry. Like you're not being incentivized to hold these positions open. There's no APR, there's no interest, there's no funding rate. I think there should be potentially for these things, but maybe we're also seeing like some of these bets turn into things you can leverage. I've seen that as well.
Do you think we'll see perp markets for prediction markets?
What's that, Max?
Do you think we'll see perp markets for prediction markets, at least for the
absolutely.
large liquidity ones?
No, large liquidity probably not. I mean, because these things already don't have liquidity. So
on the few prediction markets that actually have liquidity. I don't think that something with 270k liquidity would get a perp market listed.
adding perps on, I mean, the risk is, anything that's so easily manipulable. Like most of these.
Well, it's like an Oracle exploit vector, right? Like you can say if X amount of liquidity can produce Y amount of profit, and the profit costs more than the cost to change the price, then you should some sufficiently amoral actor will do that.
Yep. I remember, I know this is about getting me my parting word because I got to hop here, but I remember back in like 23, in Austin, somebody was telling me about a perps market for basketball games that they'd built that was supposed to like resolve you'd have people betting in the middle of the game and the price would be fluctuating in the middle of the game. It was such a niche thing. Didn't go anywhere. But I think those things don't go anywhere because there's just not enough liquidity for them.
Yeah,
which is why we need an HLP for perp markets. But we also need to have a reason to have it. Like there's got to be yield somewhere.
Yeah, there's got to be people wanting to gamble on it. And there's got to be people wanting to take the other side of that gamble, like, buying a PT.
Well, I know you got to go, but I think we should kind of transition to the question of the chicken and the egg of liquidity and volume.
Great to chat with you guys, though.
All right, see you, Rob.
Thanks for coming on.
Yes, Rob.
Do you understand that point though? I'm sure you're familiar with this, Darren. But so I've been looking at all of these stock assets like X stocks and Ondo, for example, and a lot of them have no liquidity. And so like the sparse liquidity they kind of have, like $50 here, $100 there, it doesn't really get a lot of volume because no one's going to make a swap through $100 of liquidity. But there'll be like some very, very niche outliers where someone has seeded, a few tens of thousands of dollars of liquidity for one of this like super niche asset in a stock class or in an Ondo stock class. And those get hundreds of thousands of volume. And so like it's made me think at least that in some cases, the liquidity precedes the demand, or the liquidity precedes the volume. It's not that volume incentivizes the liquidity to grow. In some cases, the liquidity just has to exist, and then it will start absorbing all of this volume.
I would agree with that, particularly because in crypto, we've always incentivized liquidity first. Until perp exchanges have come along, we've not really incentivized volume. For example, the entire spot DEX narrative was based on incentivizing liquidity through emissions.
Exactly right, because the demand for volume precedes the liquidity in some cases.
Yeah, I'm not sure how this will resolve for prediction markets because, as we've kind of tangentially touched on before, you can't really hedge these things. Like these are very ugly to trade assets, most of them.
Yes.
So it's like for every sizable market maker, algorithmic HFT entity, it's not really that interesting.
It's not interesting until it is. I mean, it's the same with perps, same with crypto. But talking about liquidity, if we look at the general lack of liquidity, the altcoin market without jump is an entirely different beast. For example, right? This is like 2024, 2025. Is very different from 2020, 2021, 2022, because we don't have people at home with stimmy checks gambling, and we don't have jump. Right. So then we take that into poly market. Maybe the root to liquidity is bringing in the retail. It's always bringing in like for example, like Aave Arc, you didn't have a lot of institutions there because whales need fish. In any market, whales need fish. So maybe how poly market got it has a bit of an abstracted and Web 2 onboarding, and blockchain is sitting kind of invisible in the back end. Right. So that does create opportunities for savvy money for the market makers, but it's still small. So, actually, I think the key to bringing liquidity in to prediction markets in general is kind of the same issue that we have in DeFi in general, which is we need a better, simpler, faster onboarding experience for normies and for passive capital. So like the HLP for poly markets, and also the retail traders, or basically retail bettors.
Speaking of onboarding and UX, do you think that there will be any leading themes in 2026? For example, I have reasonably high conviction that the whole convergence between DeFi, neo-banking, and fintech. That is one of the things I would suspect to grow the most traction in this year. The likes of EtherFi with their EtherFi card, Revolut expanding their on-chain offering, also more of the backend solutions like Stripe moving more of their volume on chain with their like either through building out their own chains or by integrating stuff that is existing, centralized exchanges integrating dexes and like all the coins that are available there. I think we've seen Coinbase leading the charge there. You have Kraken partnering with Legion, so like natively integrating on-chain mechanisms of capital accumulation and like the whole internet capital markets thesis. But curious to hear what trends you guys are seeing 2026 be defined by.
Well, it's kind of interesting that you mentioned the neobank thesis, because I've talked to a few like TradFi lads and credit card lads, and the running narrative is that cards tend to be a loss leader. And so I've always said, well, cool, if we're going to have these cards, why not put the most obvious collaterals there? So, vanilla ETH, vanilla Bitcoin, maybe wrap staked ETH, obviously, or some yield bearing version of ETH, and a few yield bearing stablecoins. So you have, maybe Athena as one of the obvious choices there. Sky, what's the other one? Sky, Spark, the ones that have tons of trust, billions of dollars of TVL. And well, the answer is, if the card itself is a loss leader, there has to be something that you're gaining from having it. And so I've seen a lot of protocols, and even EtherFi, whom I love, like they're really trying to incentivize the usage of their vaults because they get performance fees from those. And so I'm still hopeful. It's maybe I'm wrong on that, because I want to be able to use like any asset as collateral, and there are a few that allow you to do that. I think what's one with the dog? It's like crypto something. I feel bad for not remembering it, but it allows so many different types of collateral. You also have a wallet, but yeah. So there are some exceptions there. I think it's going to be a narrative. I'm not sure how it'll be investable really. We've also seen, to me, our RWAs are still going to be the narrative, right? So this was my thesis last cycle, which was that everything that can have yield will come on chain in some meaningful way. Every traditional finance instrument will make its way on chain and be composable in some meaningful way. We've seen CLOs come on chain. We've seen private credit come on chain. We've now seen billion-dollar private credit funds come on chain, which is really cool. I think Fasanara is kind of leading here. Wisdom Tree also doing a good job here. Plume Chain has an entire narrative on it. And so I think, Darren, you at IPOR, you're probably seeing a lot of these things kind of like slowly ease their way into the yield space, and because of the composability. Now, what that turns into, I don't know. Like, is Fasanara going to have their own token? No, because they're a TradFi institution. You can't govern them with the token. So what's the point? But there will be like people who are building on top of these on-chain like RWA derivatives that I think we will have some kings arise in the next cycle from that, I think, but we'll see.
Yeah, maybe. I mean, you mentioned the cards, but I think that the cards are turning crypto natives back into the mainstream banking system. What I'm more interested in is bringing assets into DeFi that are external, right? So, exactly as you said, Stephen, on the vault side is where RWAs are going to come in. So, like we really found three major PMF for vault types. One is a lending optimizer. 2 is a leverage looping across one or multiple loops, and 3 is basically a carry trade. I know Vlad from Tau has been on here before, but the carry trade is like you take an asset, you borrow against it, and you go search for differentiated yield and return it to the base asset, whether that base asset be wrapped ETH, wrapped Bitcoin. We have one of those with XAUT Gold in collaboration with Yo Protocol and ClearStar. But that's your instrument, and it's where you get collateral, where you take that to yield. My thesis, for this year actually is a bit contrarian. A lot of people are very bearish, or were very bearish, in Q4, about this year in crypto. I think that kind of in TradFi, everything's breaking, and when everything's breaking, nothing's breaking, because I have to turn on the faucet. That means that if you really get a risk rally, that always leads to elevated DeFi rates because people are using the credit markets to leverage. And that means that Athena yield comes back. Everything's abated to Athena. That means that, if you cut treasury rates down, DeFi yields up, you have a very nice risk adjusted yield back in the DeFi money market. So that starts like the base layer is basic lending optimization. So basic lending optimization is great for a non-levered money market fund. If you just stick to the prime collaterals, you can also find kind of risk adjusted either to lending to against blue chip PT assets, or I think like Tao also launched a lending optimizer on the Friday of the Stream Finance exploit, which was focusing on distressed but quality collaterals. Those can be pushed into Web 2 Earn. Vaults, lending optimization is great for DAO treasury management. It's great for savings accounts. It's great for Web 2 savings. It's good for trade finance. You drop your money in an overnight account before you have to settle the next day. You get 12 hours of yield. So all of these things can go through this infrastructure, and that's like assets into DeFi. But kind of the golden goose is the legal wrapper where we can get TradFi allocators, into from fund vehicles inside of DeFi. And so this is where we're positioning as Fusion, which is Fusion is effectively, you can think of it as a savings account or a fund construct that becomes this capital funnel for external assets to flow into DeFi, get yield, and that's a boon for all assets.
Do you think that the large-scale onboarding of TradFi allocators, maybe even by launching their own vaults or at least the accessibility of their investment products on-chain, is that something you foresee to happen in 2026 already, or is that more of a multi-year outlook?
Absolutely multi-year. The biggest issue is the regulatory fit between the KYC, which, if you're looking at the most loosely constructed, you need KYC at a vault level, and you can do some basically risk-based compliance like, Chainalysis and a dirty money score on, wherever you're placing the assets. The next best is having, segregated vaults per institutional client or user. The safest is to have KYC gating, from the vault construct down to the markets. And because of that, and because of those nuances, it's going to be a multi-year process. But we do already have some pipelines with regulated funds that are looking at Fusion as an infrastructure, specifically because of some of the tech we can provide. But it's a long process to get these through the door, to get the regulators comfortable, to make sure that all the boxes are checked. So it would absolutely be a multi-year process. And as always, you'll have the crypto natives going first. You'll have the more loosely structured, hedge funds or offshore funds that are able to touch this. And then you'll have the laggards, which are the larger players coming in different droves.
Do you guys think that there will be a major change in the base inputs and like foundational sources where yield is coming from in DeFi, or will most of it just remain the same, where a lot of the asymmetric upside of DeFi yields is basically subsidized by points and taking the other side of that through PTs, then looping that up, which in turn subsidizes the lending yield for lower risk stables if other people want to take the counterparty to that. Maybe Stephen, I guess that with mezzanine, you guys have been thinking a lot about this question, which yield strategies you can utilize in 2026 to outperform the market. So what are your thoughts there?
Yeah. I mean, there's a lot here. Will the strategy be the same? I mean, Darren and I both kind of hinted at there are yields that exist off-chain that are slowly making their way on-chain that can absorb billions of dollars, right? And so those yields are definitely going to come on-chain. They're going to be used by people. Someone has said, and I think it's right to say it, that the landscape of the DeFi user has changed dramatically. It's no longer like retail is not really retail. Retail is effectively gone in large part because anyone who is trying to quote unquote make it can't really. Like you're not going to go bet on a meme coin and all of a sudden be able to retire anymore. Meme coins are largely dead. Maybe you were on white whale or blue whale or whatever it was, and you got it right. But if you're that kind of person, you probably also lost like 90% of your net worth doing other things with the same sort of thesis. So the money that's being made here is slower, right? It's slower and it's lower APRs and it's less exciting. And the people who are slower, looking for lower APRs, and it was exciting, tend to be larger investors. Like your typical maybe high 5-figure, low 6-figure. That is the new retail, right? And the people who are with a few $1,000s, they're not able to as easily find things that make sense for them to take on that kind of risk. Yes, they're still like buy Bitcoin, but do you expect Bitcoin to 100x? No, you're not going to retire with Bitcoin. But if you're putting money into Bitcoin consistently or putting money into ETH consistently as a form of, what, in 10 years when I'm reassessing my finances, it was probably a good thing that I was DCAing into Bitcoin and DCAing into ETH. Like you can change your financial situation, but it's not going to be nearly as exciting as like, a raging crypto bull market is, where you can really change your financial status. So I guess all that is to say that the yield landscape is reflecting that. The yield landscape is reflecting this new sort of archetype of who is doing the investing. Also, even if you just go in the DeFi Dojo, which is like an open community, not open actually, it's gated. It's you have to be a subscriber. But if you're in the DeFi Dojo, then like you'll quickly find out a lot of the members there are either managing hedge funds or family offices or like trade shops or like investing in with large size. It's just like these are just the people who have stuck around and tend to stay around through bear markets where they can just do stuff. So the yields that we see, like I said, RWAs, I think are coming on chain, but also the things that are harder to get are now being gone after because there's fewer things that are easy. The low-hanging fruit have all been picked. And so now we have to climb up the trees and get those harder fruits. So for mezzanine, one example of this is institutional arbitrage, which means like, let's just say Athena depegs. Athena has recently, I think, gone down to as much as a 50 bip depeg. And so what institutions can do if they've KYC'd with Athena is they can buy those. You can buy USDE or SUSDE. Well, it's 50%. 50%, that'd be insane. Well, it's 50 bits depegged and then redeem it for USDT through Athena. And then being able to take that and then somehow pass on those benefits to the end user, I think is a new value add we haven't seen before. So we're doing that with mezzanine. We have a rate arbitrage or like an NAV arbitrage, where if anything on chain, any of these stablecoins that are redeemable for the NAV and they have proof of solvency do go below peg for like obvious liquidity issues, not anything affecting the protocol itself. Then we can benefit from that and like return a competitive APR, filling a new niche. So we've seen the crazy stories from a few of these more exciting characters on DeFi. Like, we made millions of dollars doing Uniswap, crazy technical esoteric strategies back in the day. Well, I mean, these kind of strategies are things that I think will become tokenized or put into vaults and maybe on IPOR as well. And then end users will be using them. The thing that scares me, though, is that composability is certainly a two-edged sword, because if you have a leveraged strategy, I mean, too bad Rob's not here because he talks about this a lot. If you had InfiniFi doesn't invest in anything that already has leverage. So InfiniFi wouldn't, for example, invest in a stable coin that's underlying is like, a leveraged ETH basis trade or something. So
for example, like Avant, would that be one?
Well, Avant right now is exactly, good. So Avant, as far as I know, is doing the Aave Athena play as well as maybe Loop Syrup USDT. So now you have SAV USD, which is getting around 16%, which is crazy high for a senior tranche, because they're taking on leverage underneath. And then I think you can take SAV USD, I haven't checked recently, and put on Euler and get leverage on that. So you're taking something that already is exposed to leverage and then leveraging that up. And then who's to say that, like Bovant or some other crazy degen protocol doesn't say, well, you know what, that's a really good yield. It's like 30% yield on looped SAV USD. I'm going to create a protocol with my own stablecoin, and then I'm going to use that as a portion of it, and then we can loop that. And so that's when things kind of become a house of cards. And really, I mean, luckily, liquidity is still a constraint there. There's not infinite liquidity to be lent out to borrow against it, or else the underlying loops start to become unprofitable. But I have no idea how that answered your question anyway. That was kind of a bit of a a bit of a nerd snipe there.
No, I think overall
that's
a
question.
If and how the base sources of yield will change in 2026.
I still think Lendag is going to be big, but now, I mean, Darren, you can speak to this too. Lendag was really exciting. Then a few things blew up, and people were like, "Oh, we can't just be lending to everything."
Yeah, but I mean that's it's choosing. I mean, your prime collaterals. I think Gauntlet has Prime and Frontier. Steakhouse has steak and smoke, and I mean these are different risk profiles, and I mean that's always investing. You need to find on this kind of a efficient frontier, what's your risk reward trade off, right? And that is the crazy thing is like IPOR, the interest rate derivative, and the pools, and also the vaults. We've always stuck in the kind of this weird no man's land in DeFi, which is risk adjusted, right? And you have people that are sitting on top of the, either on the Ponzi yield side or the just use Aave side. But there's so many rich opportunities in between. And, some, things like last November really remind us what risk adjusted means. And yeah, I mean, it's a great place to be. But yields are compressing. But if we get kind of a risk rally in the majors in the stock market, if the printer goes back on, I think that it's going to differentiate again. You're going to have a lot of nice kind of risk-adjusted returns on basic lending optimization with more collaterals. But I think that the points farming narrative, it's definitely lost its shine a lot because a lot of that's coming from basically DeFi VC subsidies. But, there are a lot better, more sustainable, more long-term token models that are out there. I know there's all kinds of discussion about the, like buyback and burn, the underlying what are different ownership models on the token side. But these are all, I think, more rational, more reasonable, more long-term, but you don't get the same kind of Ponzi-like returns that we saw in different cycles. So yields are definitely collapsing. They're harder to get, and they're almost impossible to get on your own. And so this is, one of the things we started building Fusion when at the beginning of 2024, we started architecting it because we saw, for example, this was when the points craze happened with EtherFi and Pindle, around the LRTs. And also this was when, Euler was relaunching, you had Fluid come on. So we knew that the market would be insanely fragmented, and you need a market efficiency engine like Fusion, and it will be nearly impossible to execute as an individual actor. And I would say, from what I've seen on chain, the execution engine that we have and the capabilities that we have in Fusion are at the top of DeFi, but that's because we spent a couple of years just digging in and researching. It's very difficult, in size to be able to automate all of these opportunities and also actively risk manage.
I think both of your guys' answers imply that the retail paradise in DeFi is somewhat dead, and I would agree with that and even extend that to crypto at large. I mean, the altcoin turned $1,000 into $1 million trade, and like this entire vibe, this entire narrative is pretty much dead.
But maybe it'll come back.
Same for meme coins.
The bullish case is that meme coins are going out of vogue. Hopefully, I mean, maybe they'll come back. I'm sure some of them will make a comeback. But meme coins killed the altcoin, right? The meme coin star killed the altcoin star. What was that? Or the meme coin killed the altcoin star. Because they just took all of the like, not intellectual capital. They took all of the attention. Meme coins took all the attention last cycle as the ticket, as your lotto ticket, right? Because you had everyone posting, you had a cartel of people posting about, this just hit 100x, this just hit 1,000x. I just made all this money with this, and everyone was like, oh, this is where the money is made. And like there were so many, rails kind of built to bring in retail specifically into that one sector of the market, and then just extract an insane amount of money from them, right? One, it burnt retail. So we lost a whole class, or we lost a large portion of a class that otherwise would have come into DeFi, would have come into crypto in general, and had been interested in it for other reasons. Because when you're in altcoins, you have to at least kind of understand what you're investing in. So I don't know, Darren, you probably remember like the 2014 cycle, the 2017 cycle, we were getting excited about all sorts of things. Golem is one of the ones that I always, go back to, like tokenized compute. That was awesome. And then, Chainlink, right? All of these things that ended up becoming like rails and infrastructure for DeFi, those were the things you'd bet on and would go 100x, 200x. Now it's like, I don't know. I saw Testicle recently on Solana, and like that's a big meme coin. It's just it's stupid. It's not really getting people to care about crypto at all. It's like killing the whole ethos of crypto in general. Hopefully that narrative dies. Unfortunately, I think that Polymarket's taking its place right now. But I do see like the optimistic case where, because those two things have fallen out of favor to some extent because they burn people, that altcoins once again become interesting. Will it happen? I don't know. But that would be kind of sweet. I also think that the on-chain fund, right, strategy vaults are becoming the norm. I think there's going to be big winners and big losers in that space, and so that'll sort of we'll see how that all shakes out in the end.
Yeah, I think we should have another episode that goes a lot deeper into the different methods and trends of curation that are happening this year, how curators are evolving, the onboarding of traditional asset managers, or if maybe even DeFi native curators will evolve to also appeal to TradFi capital. But on the note of altcoins becoming more attractive again, maybe would you each mind sharing one or two or however many you have DeFi specific project picks that you think you're at least bullish on the project itself for their growth metrics in 2026 more than most others, and how that will translate into token upwards price action as well?
Go ahead, Darren. I'll let you go first.
I don't hold so many alts, to be honest. I'm again, like you were joking around with Rob, mostly heads down building. But some ones that I created a basket of. I thought with Trump, I made a mini thesis that retail was coming back. That turned out to be very wrong. I ended up blowing up a small portfolio, just sitting in these basically a basket of shit coins, that I thought would pump, if kind of boomer altcoin people came back and some of the infrastructure level. I really like DeFi that has, like both Fluid and Euler. They've been pretty innovative about, also routing swaps through the credit markets and a massive revenue generation possibilities. You have, a lot of people talking about, it's good until things go wrong. But, I really like that idea of capital efficiency, so those are two projects that I always really liked. But, I think some of the best innovation and sustainability always comes from the credit markets, right? So, even with Aave's recent, kind of governance drama, I hold Aave not in a significant amount, but, it's a solid project. It should be considered like the stalwart of DeFi, and it has strong fundamentals. It has a treasury, it has buybacks, it has, all kinds of, kind of spin-off infrastructure that's using its core infrastructure. So Aave, besides the governance drama, is still should be considered a darling. Anyone that's really pushing the bounds of risk-adjusted, responsible, not rehypothecation of capital, but reusing the same kind of structure to have capital efficiency where you can do multiple things with the same thing. And that all of that, of course, I'm always wondering, how much of it goes back to the treasury. This is it, how that value accrual affects the token holders. Because anything that's completely disconnected is, there's no reason.
And for me, it's I hold very few alts as well. I've recently, I wanted to do a post actually about like how cool, like the double-edged sword, again, everything's double-edged sword, it seems like, that we can invest in nearly anything on chain now. So you don't have to be investing in altcoins in order to be investing on chain. You can invest in gold, silver, stocks, and all these things. And now you can go like, I'm liquidity farming QQQ and SPY on BuyReal. That's amazing, right? And I have like my own thesis there, and you can express theses more easily. And so instead of, so I don't know. Is that also going to absorb money from the altcoin market potentially? But I do think there are going to be some winners. For example, Pendle has been like hinting at a tokenomics rework, and I think that rework could push a lot of value back to. So I think that's a good one. Obviously, they are the hegemon in the rate swapping space. People just use them as a yield source. There's Pendle, Aave, Athena, right? Aave has now integrated them. They're slowly making their way over to Solana, which I think is fairly positive. In terms of protocols that I'm just like, I think will do fairly well. The winners are going to keep on winning, right? I think Morpho is going to keep on winning. I think it's fairly clear Aave is always going to keep on winning. Uniswap is even going over to Solana. They're not very used over there. They're going to keep on winning. Fluid, I agree with you, Darren. I think they're maybe not like an obvious huge winner yet, but they have been winning. I think they're going to continue to win. And I actually do think the Fluid token will probably be a beneficiary of that as TVL goes up. And then obviously, I think Mezzanine, which is a protocol that I'm building, we started with the tokenomics because we wanted to build a project that like is considering its own asset first, not as an afterthought. And so I think when people see what we're doing with that, they're going to get genuinely excited about it. So that's a self shill. But I actually do think that tokenomics will change. And the thing that we're doing is probably going to be fairly popular for governance tokens that exist thereafter.
I hold a lot of similar views there. I think if I had to pick one product to be like my favorite very DeFi native thing, not including like perp dexes, prediction markets, all of these things, but stuff that is like building DeFi on top of DeFi, it would probably be Pendle. It's just a great thing to use. Like they are expanding their education around it. It is easy to understand, even if you don't have a super sophisticated TradFi background, and it is enabling liquidity and like suiting different investor profiles for so many launching projects. I think like this is one of the biggest net value additions to DeFi in a very long time. I'm also like, I refuse to give up the Pendle token. I 100% acknowledge that for Pendle, just as for lending markets or for DEXs, it is always very difficult to kind of create or meme into existence a token appreciation alongside the product growing and the product being adopted. I do think that the Pendle team is one of the most competent ones in the industry, and I do have faith in them that there will be some restructuring regarding the tokenomics that will make holding Pendle either liquid or as VE Pendle more attractive. I also think that Morpho is worth keeping an eye on in 2026. I think in terms of integrating with centralized exchanges, what they have done with Coinbase, also catering as the base layer for so many curated vaults, I think they have vastly outperformed Aave in terms of like their brand standing and brand building and reputation building this last year. But it's not to shit on Aave. I mean, they're kind of dealing in a somewhat different league just because they're much more established, appealing to larger allocators of capital. But I do think that Morpho really has presented a very attractive and impressive growth story in 2025, and I would bet that this is going to continue this year. Ifina, obviously a little more reflexive and dependent on the overall risk appetite, but I would like to see it win because it's just like it is a solid product. It is tokenizing a popular trade, making it accessible for the masses, taking away automating like an annoying part of work, having to rebalance these, having to monitor the margin for spinning up a basis trade manually. So I think they're a protocol that deserves to win. In terms of valuation, they're obviously already pretty high. And the tokenomics aren't that amazing. I mean, similarly for example for Morpho, where part of the token has been used for emissions. So it is hard to create a net buy pressure there. But yeah, these are some alongside the emergent DeFi protocols that are being built by the friends of our pod. That's some stuff I would like to hold in 2026.
Well, I know we're over time, but there's one last potentially positive narrative that I will speculate on, even though I know it's like history doesn't necessarily support this idea, which is I think Solana governance tokens may make a comeback. And I know that's like a fairly unpopular idea because Solana governance tokens have tended not to do particularly well, but I am seeing Solana sort of gain new life as a DeFi native protocol. So it was kind of DeFi native. FTX happened, it died. Meme coin happened, it was revived. But then meme coins kind of died and it kind of died. But now in the remnants of that, we're seeing Solana DeFi. So with Exponent, with Solstice, with Camino, with Radium, with BuyReal, which I just mentioned, X stocks. All of these things are true to DeFi and like the soul of DeFi. And I think they're going to be attractive. Like for me, I'm fairly EVM native, but I have enough incentive to put some of my capital on Solana now and do DeFi farming over there. And so I do think that there can be a few like Solana native king made protocols whose governance token may do well if the tokenomics are right and if they make a lot of sense. So I'm kind of hopeful for Solana DeFi to have its own season, and think that some of the and then also like these massive issuers of off-chain things coming on-chain, like Ondo as an example, and like Xstocks. I think if they really like solidify their place in this space, that that they may have, you know, a fairly decent chance at having an asset that's correlated to TVL.
I mean, at the end of last year, if I could summarize, like kind of, I had 3 different conversations with 3 different types. So all of the DeFi native builders are always long EVM ecosystem. All of the kind of institutional, like crypto native institutional guys were shilling me Solana. And then all of the suits were talking about Canton. So that was 3 very, very different conversations that I was having at the end of last year. And obviously, you know, we've kind of, you know, we've tied our ship to the EVM ecosystem, but you know, this is just from what I'm hearing from basically outside of my realm.
What about privacy coins, man? Zcash, Monero. Who knows? Maybe they'll get maybe they'll catch their own narrative and not just Zcash.
But yeah, any last outlooks, last predictions before rounding up the episode?
I'm still just jealous of where you're at right now. It looks so beautiful.
You should definitely come over.
It's a bit of a walk for me, but I'll consider it.
Not too far for US distances.
I think. Well, Darren, you gonna be at ETH Denver?
I'll be there.
Yeah. So you know, if you guys want to come hang out with us, we'll be at ETH Denver.
Yeah, sounds good. Sounds good.
We'll definitely get something organized. Thanks a ton for joining, guys. Where can people find you? Where can people follow up with you? How can they reach out?
Pigeon mail. Or follow me on X. Or join the DeFi Dojo. Various different things.
app.ipor.io/fusion or IPOR_IO on X, where we're about to announce institutional integration today.
Very nice. So people better go leave a follow. I'll make sure to put all the links in the podcast description. And thanks again for coming on, and have a great rest of your day.
Thanks, guys.
Thanks, Max. See you, Darren.
See you guys.